Welcome to Real Estate Finance and Accounting Essentials. In this presentation, we'll explore the foundational knowledge every real estate professional needs to navigate the financial and accounting landscape of this dynamic industry. Whether you're an investor, advisor, or enthusiast, you'll gain insights into the tools and techniques that drive real estate success. Let's dive right in by previewing what we'll cover today. Here's a quick roadmap of our journey. We'll start with an introduction to real estate finance, helping you understand why finance is at the core of property transactions. Next, we'll unpack core financial concepts with practical examples. Then, we'll look at how accounting principles apply specifically to real estate before moving to common challenges and their solutions. We'll also highlight enabling technologies transforming the industry, share insights on future trends, and finally, wrap up with key takeaways. Now, let's get started with our foundation, an introduction to real estate finance. To begin, let's talk about why finance is considered the backbone of real estate investment and management. Real estate finance is essential because it provides the framework for acquiring, developing, and growing property assets. Whether you're considering commercial office buildings or residential apartments, strong financial principles guide everything from feasibility analysis to deal structuring and risk management. By understanding the importance of finance in real estate, you'll see how every transaction is structured, funded, and aligned with an investor's goals. In the next section, we'll take this foundation and break down its key elements. Successful real estate finance rests on three pillars: forecasting, financial ratios, and managing debt and equity. First, forecasting. This involves projecting future income and expenses, often through cash flow analyses. With accurate forecasts, investors and managers make smarter decisions about where and how to grow portfolios, even as market conditions shift. Next, we have financial ratios. Metrics like the loan-to-value ratio and debt service coverage ratio are used to evaluate whether a project is financially viable and safe. These ratios matter whether you're working with a single home or a sprawling commercial complex. Finally, debt and equity. Most real estate transactions are financed by a mix of borrowed funds and investor capital. The blend chosen depends on risk appetite, expected returns, and the property itself. Lenders and investors carefully assess these elements before making decisions. Building on this financial base, let's see how accounting plays a crucial supporting role. Accounting in real estate is all about accuracy, transparency, and compliance. There are three main accounting essentials to consider: depreciation and valuation, expense management, and transaction records. Let's start with depreciation and valuation. Real estate assets decline in value over time, and capturing this accurately is vital for both financial reporting and optimizing taxes. Regular reassessment ensures property statements reflect true market value and supports long-term planning. Next, expense management. Here, entities need to budget not just for the purchase, but also for operational costs, improvements, and tax obligations. Effective financial controls keep cash flow healthy throughout an asset's life cycle. And lastly, transaction records. Every purchase, sale, or lease needs precise documentation. This isn't just for internal records. Accurate paperwork supports audits and fulfills tax requirements. With a strong grasp of these principles, let's examine some of the biggest challenges in the industry. Real estate today faces growing complexity and compliance demands. Here are four big challenges: data integration, regulatory and tax compliance, workflow management, and property valuation. First, data integration. Financial data in real estate often comes from many sources: lenders, agents, managers. For smart strategy, this information must be pulled together and analyzed as a whole. Next, regulatory and tax matters. Ever-changing regulations and stringent government standards mean companies must stay on top of timely reporting and risk management. Security, too, is key. There's always a risk of cyber threats. Workflow can also be tough. Transactions typically involve many parties, each with their own deadlines and requirements. Good workflow management systems are vital to ensure nothing falls through the cracks. Lastly, valuation challenges. Assessing the value of diverse properties is tricky, given market volatility and unique property features. Getting accurate valuations depends on current data and local expertise. With these challenges in mind, let's see how technology is enabling transformation in the field. Technology is revolutionizing every part of real estate finance and accounting. There are four main areas to focus on: automation, analytics, security, and integration. Automation is making processes faster and more reliable. Everything from tracking payments to managing leases can now be handled by smart platforms, reducing manual errors and boosting productivity. Analytics has become indispensable. Modern platforms offer real-time dashboards, improving the accuracy of forecasts and bringing fresh market insights. Leveraging big data allows managers to make better, faster decisions. Security matters more than ever, especially given the high-value transactions in real estate. Cybersecurity measures protect sensitive financial and property data from breaches and fraud. Finally, integration connects all the dots. Integrated systems allow property, finance, and accounting data to be consolidated, giving decision-makers a complete, reliable view of the business. As technology continues to advance, the future of real estate finance is being reshaped in new ways. Let's look ahead to how future trends are set to redefine the industry, focusing on three areas: blockchain disruption, sustainability metrics, and AI analytics. First up, blockchain. This technology is making real estate transactions more transparent and secure, streamlining processes like title transfer, escrow, and record-keeping. Decentralization and smart contracts are set to revolutionize property management. Next, sustainability metrics. Investors and regulators increasingly demand transparency on energy efficiency, green building certifications, and ESG, or environmental, social, and governance reporting. Forward-looking firms are using sustainability as a new value driver and risk framework. And finally, AI analytics. Artificial intelligence is taking forecasting and risk management to the next level. It enables predictive maintenance and smarter asset management across property portfolios, helping organizations stay agile. Now, let's bring everything together with a few closing thoughts. Mastering finance and accounting is the key to unlocking long-term value and building resilience in the ever-evolving world of real estate. These skills give investors and organizations a lasting competitive advantage. As we move forward, embracing digital technology, complying with regulatory frameworks, and staying alert to market trends will be essential for anyone seeking future success in real estate. Thanks for joining this journey through real estate finance and accounting essentials. If you'd like to deepen your knowledge, be sure to subscribe and stay tuned for more in-depth explorations.